Hi everyone, good afternoon and welcome to another section with Accent Consult on the Entrepreneur's Corner. So this afternoon we'll be looking at managing tax compliance for your business. So in previous videos on these shows we've had to talk about the various structure under which you can carry on your business. So let me just try to refresh our memory. Businesses can be carried on under two structures basically. That is businesses that is for profit making, because there's also an option of registering an NGO. There's an option of registering a company limited by guarantee, which these two entities, they are not for profit making. But if what you desire to do is to register an entity which is for the purpose of making profits, making money, let me put it as very plain as that. So if what you want to register, you want to set up a business, and you know that this business, the purpose of setting it up is to make profits, make money, then you have two structures under which these businesses can be carried on. So you can either register a business name, which allows you to carry on your business either as a solo business owner or in partner with someone else, or you incorporate a company which can either be a private company or a public company limited by shares or unlimited. Then with the new Companies and Allied Matters Act amendment, so we now have two other options again, which has to do with businesses that are carried on as partners. So you can now register a company limited, a limited liability partnership, or you incorporate a limited partnership business. So of all these structures, whichever you go for, there it is expected that you also pay tax. So remember I said that if this business is registered for the purpose of making money, then it is expected that you pay tax, because taxes are levied on income. So this is to say that if you don't make any money, then you don't have a duty to pay tax, because taxes are levied on income. It is what you make, that's what the tax law is going to be be enforced against. So what are the taxes that you can pay, or that is expected that you pay as a business owner? So you have a personal income tax, you have companies income tax, you have value added tax, you have capital gains tax, petroleum profit tax. But our focus this afternoon is on SMEs, people who are into businesses, and not just business in the petroleum sector. So we'll not be talking about petroleum profit tax and some other taxes. Okay, so as a business name owner, what tax is it expected that you pay? It is expected that you pay your personal income tax. It's expected that you pay value added tax. It is expected that you also pay company's income tax if that business is carried on as a limited liability company. So for personal income tax, how do you pay this tax? The agency that is saddled with the responsibility of managing personal income tax is the state internal revenue service. So each state that is 36 states of the federation, they all have their names that they call this board. Like in Lagos State, they are called LIRS, that is Lagos Internal Revenue Service. So this agency, they are saddled with the responsibility of collecting your personal income tax. And the provision of the Personal Income Tax Act, that's the act that governs personal income tax in Nigeria. The provision of that act says that taxes are to be paid to states where you reside. So this is different from company taxation, where it is expected that you pay your company's tax to the state where business is being carried on. So for example, if I stay in, let's say I'm based in Ondo State, and my business operation, if it is very convenient for me to operate my business in Lagos, and I move to Ondo State every day, if it's something that is very convenient, I go to Ondo State every day after my business transaction. It is expected, going by the provisions of that Personal Income Tax Act, that I pay my tax to the tax agency in Ondo State, because that's where I live and that is the provision of that personal income tax. And how often do you pay your personal income tax? It is a 1 year thing. So this is to say that at the end of the year, that is from January to December, you calculate your income for that year. Then you can do a self-assessment, or you can also visit the tax office. You tell them your income for that year, and they do an assessment for you. Then you'll be told what to pay based on the tax rate for personal income tax. So for personal income tax, it is expected that it is an annual tax. It's an annual income tax. So it's not a tax that you pay every month. That is if you are the owner of the business. But for employees, they pay their own tax ahead. So that's why you see the pay as you earn scheme. So for employees in either government employment or a paid employment under a company, for people who work for a company, they pay their own taxes every month. But as a business owner, you pay your own tax at the end of the year. So that means from January to December, it is expected that you pay your tax at the end of that year. So that is how you manage your personal income tax as a business owner, because you make income from that business and it's expected that you pay your personal income tax. So going to company's income tax now. As a company, remember a company is an entity in law. So the same way an individual has a duty to pay tax as a person, same way a company also has a duty to also pay tax as a corporate person. So how does this company taxation works? So the before the amendment of the Companies Income Tax Act, the what was obtainable before is just like human to at the end of a year, January to December, you pay your personal income tax. The same way for a corporate entity too, at the end of a year. But the difference now is that a corporate entity has the liberty to choose its financial year. So this is to say that your financial year may not be January to December. Your financial year can end in February. So once you have a financial year, because these are some of the things you need to do upon incorporation of your company, you need to decide, what are we going to choose as our financial year. But then if you are choosing your financial year, it also has to be within 12 calendar months. So it is not for you to say, I have the liberty to choose a financial year, and you are choosing a time frame that is almost like 14 months and all that. No, it still has to be within a 12 calendar year. So you may have to look at the month your company was incorporated. So let's say if your company is incorporated in September, then your financial year is 12 months from September. So that is to say that you are not binding within the January to December time frame, but you have a duty to decide your financial year. So after you decide your financial year, then it is now expected that at the end of this financial year, you remit 30% of your income, of the income you made you make in a given year. You remit it as tax. So that is what was obtainable before. But with the new with the new amendment to the Companies Income Tax Act, so there's a little bit of relief. Not even a little bit. There is a relief now for business owners, particularly startups, people that are just starting their business. So this law, the provision of this law is such that it gives room for you to structure your business, to put the business, like you run it, get it going, and you have little concern or little worry on tax compliance, because this new law now says that if your turnover is not up to if it's not up to 25 million in a given year, then you are exempted from filing and from paying tax, from paying companies income tax. But then you still have a duty to pay to file for returns, but you are not going to be paying for tax. You still have a duty to file returns. So this is to say that it is easy. So what duty do you now have as a company owner, someone who is the director of a company? Is it not for you to go to bed? No. You still have a duty to file returns at the end of your financial year, even if you are not paying tax because your turnover is not up to 25 million. Then you have a duty to file your tax returns, to do that within time, So that is one way for you to manage your tax compliance. So managing your tax compliance, because if you don't even know the tax you have to pay in the first place, then it will be very difficult for you to manage your tax. So the first thing that you need to do to manage tax compliance in your business is to first identify the taxes that is expected. Because if you know, it's just like when you want to solve a problem, you need to identify the problem first. So if you're able to identify the problem, then it's very easy for you to provide solutions. So the first thing for you to management, or the first step that you need to take for you to effectively manage tax in your business, is for you to identify the taxes that are applicable. Oh, I'm into this line of business. What are the taxes that are expected of me to pay? How do I pay it? When am I to pay it? What is to be paid? So that is another thing. So fine, you've identified the first step I said, you need to identify what you need to pay, or the taxes that you need to pay. Now, after you've identified it, the next thing is, what am I to pay? So we've said that if your turnover is less than 25 million, you're exempted. So that is for you to also now rule out, or for you to, like, you can just create a book to say, oh, I'm expected to pay this tax. Oh, this is the kind of business I will pay. This is the taxes that are available, that are applicable to my line of business. So now that you know that this tax is applicable, then the next question is, do I have a duty to pay this tax? So if you are able to answer that in a positive way or negative, if your answer is positive, oh, I have a duty to pay, my turnover is up to 25 million, my turnover is not up to 25 million. So if your turnover is up to 25 million, then you have another issue to cross, to mark. So that is to say that you have a duty to pay. Then fine, if you've been able to determine that, oh, you fall within the threshold of threshold above 25 million, then the next question for a company is, what exactly is my threshold? Because there are also now classes. So we have 0% rate, we have 20% tax rate, we have 30% tax rate for companies now. So how do you now know the rate that is applicable to you? So it still has to do with your turnover. So if your turnover is less than 100 million, so if it's between 25 million to 100 million, then you know that you are within the 20% tax rate. But when your turnover is above 100 million, then you fall within the 30% tax rate. So these are ways in which you can manage tax compliance, because when you know what is expected of you to pay, then you'll be able to effectively say, oh, this is what I'm paying at this time, this is when I'm to pay it, this is what I'm to do, these are the things. And this, you even know where to, you are also to visit. Because if you are a business name owner and you are going to file your personal income tax, you won't go to the Federal Inland Revenue Service, you'll go to the LRS, because that is in Lagos State. That is the agency that is saddled with the responsibility of managing that tax. So what other tax again are we going to be talking about this afternoon? So I'll also be talking about value added tax. So this is a tax that businesses again have to pay, either business name or an incorporated company. So if it is a business name, do you have a duty to charge value added tax? And most of these are taxes that we can relate to. Sometimes when you go to supermarket, you see, after you are given a list of all the things you've purchased, you see a charge that reads VAT at a particular percentage. So value added tax now is charged at the rate of 7.5%. So then you can ask yourself, fine, I'm starting this business now. Am I expected to charge VAT, or is it just big stores that have the power or the liberty to charge VAT? No. So if the answer is in two ways. If your turnover is less than 25 million, you have no duty to remit value added tax. Like, you are not, it's not imposed on you to be VAT compliant, because you are exempted from the classes of people who have a duty to remit, who have people who will be charged penalties for not remitting and the likes. Those things are stated in the Value Added Tax Act. particularly the amendment to that. So if your turnover is or above 25 million, then you have a duty to charge VAT, and you have a duty to remit. So once you charge, you have to remit. And when do you remit value added tax? You have to remit it on or before the 21st of the following month after the month you collect this VAT. So let's say I've done transactions, I've charged people VAT for every transactions I engaged in the month of December. Then it is expected that latest 21st of January next year, I would have filed my value added tax return with the Federal Inland Revenue Service. So you should note this: either your business is carried on as a business name, or you carry on this business as an incorporated company. When it has to do with value added tax, the agency you are dealing with is the FIRS and not the LRS. Even though it is a business name, you have to remit your value added tax with the with the FIRS. Then this question can then pop up: how do I, or when do I start filing returns to the FIRS for value added tax? The interesting thing is, even though the value added tax act says that if your turnover, your supply, your total supply in a given year, if it's not up to 25 million, you are not expected to remit value added tax. But then you have a duty to also file your VAT returns. The only thing is just that yours is going to be a nil return because you are not charging VAT. But where you charge, then you file the returns. Like, you are not just filing the returns alone now, you're also remitting the payments. But where your turnover is less than 25 million, you have a duty to file a nil return at the end of every month, even though you are still yet to get to that threshold. So this is just what we'll be discussing this afternoon, what we'll look at this afternoon. And I believe that you've been able to identify taxes that you have to pay as a business name owner or as an incorporated company. So if you have any question, because I know tax issues, there are things that sometimes you need a one-on-one engagement, because taxes are something that all business owners always have a little challenge with dealing with it. So if you have questions, you can just drop it in the chat box, or you send a mail. Our email address is on our page, so you can send a mail, or you can request to speak with a consultant, and we'll get back to you. Thank you.